Welcome to EWA's FIN-LYT podcast. EWA is a fee-only RIA based out of Pittsburgh, Pennsylvania. We hope all listeners of this podcast will benefit as we deep dive into complex financial topics that we will make simplified for you. And we hope that this really serves as a catalyst so that you can make the best financial planning decisions for your family and also save time.
Welcome, everybody. On this week's episode, I'm joined by Devin, and we're recording this mid-November 2024, and we are going to talk about cryptocurrency and Bitcoin. It's been all over the headlines after the election, and going to take a deep dive into what it is, and do we recommend it as a good investment? But Devin, let's just start, why is this relevant right now?
Yeah, great question. So obviously, crypto, Bitcoin, Ethereum, et cetera, are all over the news right now. Due to the Trump win, he's been seen for quite a while now as pro-crypto. I would say primarily because he's been backed by the crypto lobby, which might be a good or bad thing. But either way, pro-crypto folks, crypto investors have seen this as a tailwind to both the price of crypto, but also potentially allowing crypto to become what I think it was meant to be. So that's the long and the short of it. I think as of today, the price of one Bitcoin is above $90K right now.
It dropped today. Yesterday it was 91. Now it's down to 88. So it dropped a little bit. Still,
it dropped.
It was
today.
an all-time high yesterday.
So it's in that 90K range right now, which is absolutely an all-time high. And I believe it's up about 150% over the past 12 months, something like that. Right, so prices have been going crazy, and again, I think the primary reason is because of the Trump election. So
yeah,
Trump
was
winning the election.
Very pro in the campaign, and like you said, took money from crypto. Like people donated money to the campaign in crypto, seen as very pro crypto, and that kind of led this spark. But I think so. Before we dive into like any thoughts, recommendations, I think it's really important to get a really good understanding of what this is, because I think it's very misunderstood, and people read Bitcoin. Bitcoin is an investment, Bitcoin's going up, but there's so much behind that in the technology and everything that is like, Bitcoin is just such a small piece of the pie. So let's start with like, what is blockchain? Blockchain is actually the technology that this all runs on. Blockchain's a type of digital ledger that securely records transactions across a network of computers. The whole purpose is that it's decentralized and it's transparent. So it's peer-to-peer transactions. So the bottom line is it cuts out any need for an institution. Like a bank, it's just person to person. And so a couple key benefits. One, decentralized, unlike traditional banking system that is controlled by like a bank. It operates peer-to-peer, so there's no single party that controls it. Deregulated completely. It's a way to transact records. It's transparent. And basically, a lot of companies have started to adopt this technology. Which we'll get into, it was created in after 2008 financial crisis for a few reasons. But in the last, 15 years, a lot of companies have started to adopt this in the way of supply chain management. It's a way to track goods from origin to customer in a transparent way. Healthcare is using it to store medical records, and real estate to simplify transactions and smart contracts, and the different industries are using smart contracts. But that's like, I like to use the analogy of blockchain is like the internet in the 90s. Like the internet was the technology and the platform, and then from the internet, you got all of these tech companies. You got Apple, Google, all these things that transpired from the internet technology, and that's how I view blockchain. You have blockchain as the actual technology behind it. Now you have these cryptocurrencies, all these other use cases that were built on it. Anything to add on that, Devin?
No, I think you put it pretty clearly there. But again, just to kind of reiterate for listeners that sometimes we tend to get, and even you and I do this, tend to get blockchain and cryptocurrency. We use those terms interchangeably, but to be clear, blockchain is the platform. That is the technology that cryptocurrencies such as Bitcoin have been built on top of. So just to clarify that. So
the next thing we'll talk about is what is a cryptocurrency. So again, cryptocurrency is a form of money that uses cryptography for security operates on the blockchain technology. So unlike traditional currencies that are issued by governments, these are what's called fiat currency. These are fiat currencies. Cryptocurrencies are decentralized and are not controlled by any type of central authority. So it is a currency that was created from blockchain. And with that, you have things like Bitcoin, different types of currencies, so like Bitcoin, Ethereum, Ripple, stablecoins, Dogecoin. All these things are types of coins. So just some key features: it's digital, it's only electronic, there's no physical coins or paper. It's decentralized, so most cryptocurrencies operate on a decentralized network powered by the blockchain, like we said. This one's kind of controversial, I guess, secure transactions. It's supposed to be secure and anonymous, but there are some, because of that, they can, you can use it for like, it was, I think when it started, I don't know if it still is, it was like the biggest currency for drug purchases on the dark web.
Yep.
And so, yeah, anything to add on that? I think that's a good overview of just how cryptocurrency differs from blockchain.
Yeah, maybe my thought is that the biggest feature of it, and maybe the biggest curse of it, is the fact that it is decentralized.
Yeah.
So, again, that's the biggest feature. That's why it's popular in countries like Argentina and other third world economies. But again, that is the biggest reason why governments don't like it right now. Governments like to control their own currencies. Governments generally cannot control Bitcoin and other cryptocurrencies right now. So we'll talk about this in a bit.
I'm glad you brought that up because two things. One of the big use cases in like a third world country where you can't go to a bank, if you have the internet, which I guess some may or may not, but if you have the internet, you can do online, have an online currency transactions. Yeah. And yeah, the big thing too is the way I see it is like, what government is going to want you to not use their currency? So if they pushed cryptocurrency and people went away from the US dollar or any country's currency, I just can't see a world where a government's going to be like totally okay with that.
Yeah, I mean, now we're getting into kind of fiscal and monetary policy issues, and kind of back to what we started with. Trump has been pro-crypto.
Yeah.
But the question is will he continue to be pro-crypto?
Yeah, which we'll get into in a second. But and then I think it's important to know why this started. So blockchain, again, created after the 2008 financial crisis, was designed to eliminate the need for intermediaries by creating a system where trust is established through these online algorithms and decentralized. You don't have to rely on a bank. Basically, it's long story short, people got mad at the banking system and the financial world after 2008.
For good reason.
People lost a lot of money. And so somebody, do you know how to say this? Satoshi Nakamoto is an anonymous guy. Supposedly nobody knows who it is who created this. It's just a way to decentralize banking transactions. And essentially, create transparency, have a secure way to transfer money and transactions without using a bank. So to reiterate, just some of the benefits of blockchain cryptocurrency. So number one, transparency. All transactions are visible on the blockchain. You can see everything. Security, which again, debatable. Transactions are encrypted and immutable, so it's supposedly harder to hack, and for cybersecurity reasons, which also is one of the biggest risks with cryptocurrency, is cybersecurity is a real thing. Efficiency is to eliminate the need for intermediaries like a bank, reducing the costs, speeding up transactions, and then it provides access to financial systems for unbanked populations, like we mentioned. So a couple of the big risks. Number one, volatility. So cryptocurrencies like Bitcoin, Ethereum, Ripple, any of these, they're known for their huge price fluctuations, which we'll get into why in a second. Regulation's a big thing. So it's been pretty unregulated. I mean, the first I would say 10 years, it was like the Wild West. Like you could have anonymous accounts. Nobody knew what was going on. It's since gotten a little bit more regulated, still not very regulated, but it's any point somebody could step in and regulate this and, really hurt it. And then security risks are another one. So I think this is a Warren Buffett quote. He said cybersecurity is the biggest threat to, or cyber attacks, I guess, would be the biggest threat to humanity right now. And so that's a real thing. Is it could, at any point get hacked. It's supposedly safer, but there are cases that it has gotten hacked. And the other thing is when you go on and buy something in a digital wallet, there's I don't know all the details, but you essentially get an encryption key that you have to like physically store somewhere. And if you lose that, like there's people that bought a Bitcoin 15 years ago and they lost that key and they literally can't get their money. Mm-hmm. So it is safe in that sense, but at the same time you could very easily lose your passcode and never be able to access it.
Yep.
Okay, so one of the big things, which our view on this is, the big debate is like, is this speculation? Is this an actual investment? The first thing, there's a real lack of intrinsic value. So with a stock or a bond, real estate even, they're tied to underlying assets. A stock, a company you can do fundamental analysis on PE ratios, balance sheets, cash flows to get an intrinsic value. Same thing with real estate, same thing with bonds. That doesn't exist with cryptocurrencies. It's literally supply and demand. It's whatever people think that it's worth and how many people are buying it and selling it. There's no value backing it at all. Mm-hmm. And most cryptocurrencies, there's no cash flow, there's no earnings, there's no dividends. So their value is largely determined by market demand and sentiment rather than, like I said, any intrinsic fundamentals. It's really hard to evaluate a price based on normal like fundamental analysis.
Yeah, it's kind of your classic castle in the sky, similar to gold in a way, but gold has some technically intrinsic value. But again, how do you determine the value of something that does not have cash flows? We'll speak more to that in a minute. But
yeah, and then second thing, there's huge price swings. So the volatility is like crazier than any traditional asset you invest in. So I'm going to butcher this for sure, but I believe it hit an all-time high around the pandemic, Bitcoin we're talking, and then in 2020 I think it dropped down to under 20,000. I think it maybe was down to like 6,000, and then it's like now back up to like 90. So like that's just showing I don't know the exact time, but it was like 50 or 60, and then it dipped down under 20, and now it's like back up over 90.
Sounds about right.
So like it can swing drastically. Mm-hmm. And so the other big thing, like we talked about, is regulatory uncertainty. At any point they could step in. There could be legal concern, regulation that could, really, really hurt this. The counter argument, though, to this being an investment is scarcity. So any like huge Bitcoin believer will tell you that like it's a scarce asset. There's only so many Bitcoins you can mine, and that gives it a value. Whether it does or doesn't, I don't really know. It is a technological disruptor. So like it is a new technology. It is a new form of money. There's an argument that could be made that they created this technology, and money is something you can invest in that's going to disrupt an industry. And then people argue that it's a form of portfolio diversification, that it's not correlated to any type of traditional asset. So it could be a diversification tool to diversify outside of stocks, bonds. I don't necessarily totally agree with that. We'll talk about our outlook, but anything to add on that so far, Devin?
Yeah, look, I mean, we can poke holes in the crypto argument all day, every day. But sometimes, like you mentioned, sometimes it just comes down to being a believer. I wanted to comment maybe quickly on the supply and demand piece and the fact that, yes, the supply of Bitcoin is fixed, but that doesn't necessarily mean that the value should always go up.
Supply is fixed, so it basically just depends on the demand.
Exactly.
Yeah.
Exactly. So those two things work hand in hand, obviously.
Yeah.
Dumb example off the top of my head, the supply of 1970s telephones, it's fixed. But that doesn't mean that the price...
There's a demand for it.
Yeah, there's zero demand for it.
Yeah.
So bad analogy, but I think that...
get the point.
Yeah, you get the point there.
The other thing I want to talk about before we dive into like what's the outlook now and our recommendation, I have seen from multiple clients, there are huge risks with this in the form of the platform that you're transacting this on. It's gotten a lot better the last couple of years. You can trade on things like Robinhood. There's ETFs you can buy on like Fidelity, any platform. But prior to that, and what's the guy, Sam Bankman-Fried?
Sam Bankman-Fried.
Yeah, the FTX, is that his? Mm-hmm. So I don't know the whole story, but they went bankrupt. Essentially, it was fraudulent accounting or something.
Okay, so long story short, they were a crypto exchange,
Yeah.
a place where you can buy and sell crypto. they also had a hedge fund. It was a crypto hedge fund that there were too many. They were too close. Effectively, FTX was funding the hedge fund. Blanking on the name of the fund right now, but FTX went bankrupt because it was backing the bets that the hedge fund was making. Ultimately, the hedge fund was making these bets on crypto. When crypto prices dropped, they went bankrupt, and then the $8 billion that FTX gave Alameda Research, was the hedge fund's name, was gone. And so FTX. And the funny thing is now, just sorry to interrupt, but FTX went into bankruptcy. The bankruptcy court has been trying to get back the value that FTX had, and it's actually worth more now, I believe, than it was in 2022. Yeah.
Wow.
But that's a separate story.
But yeah, so basically these exchanges are like not regulated. There's a lot of smaller exchanges, stuff like that happens. But I have a story of a friend of mine that he had money, a significant amount of money in crypto on one of these, I would call them questionable exchanges. Like you're not trading on Fidelity or Vanguard or Schwab. You're on one of these like small exchanges to trade crypto of a small company that started. And he had a lot of money in there and hit an all-time high. I'd advise that you should sell this because when this asset hits a high, you should take some off the table. Didn't do it. And what happened was a similar thing. The exchange, something happened where they were getting investigated, went bankrupt. He luckily pulled his money out the day before, pulled all of his money out. The next day, the exchange went bankrupt, and had he not do that, everyone just lost all their money, just gone. So that's one of the risks is if you are going to trade it, make sure you're on a reputable. I think Coinbase now is pretty reputable. Like I said, you can do it on Robinhood, which Robinhood has their questions as well. But do it on an exchange that's not going to, blow up and you lose all your money.
Yep.
Okay, so let's look at now what's the outlook, what are our recommendations. So Devin, why don't you fill us in on, we've said that Trump campaign is pro-crypto. We've seen this price, new all-time high. What's the outlook? Why is that? What's the substance behind it?
Yeah, again, to kind of recap. So the new administration that's going to come into power in January is apparently pro-crypto. Due to that, price is up high. But I think all of this hinges on two things. It's the SEC and the SEC chair, Gary Gensler. Gensler has notoriously been about as anti-crypto as you can possibly get. And he is the primary reason, I believe, why the crypto lobby has been funding Trump, because Trump I think he's already stated publicly that he will be getting rid of Gary Gensler.
Yeah.
I think he said, quote, on day one.
Yeah.
Why is that important? Because, again, Gensler has been, not only has he been creating anti-crypto legislation, also suing crypto and crypto-adjacent companies and individuals, but he has not been participating in what a lot of crypto firms want, is a clear, they want to build a framework of rules, and they want that to be applied fairly. And he's just not playing that game. And whether that's good or bad, I'm not here to say, but he pretty clearly has not been allowing crypto firms to operate in the U.S. I'm being overly simplistic there. So again, if Gensler is in fact taken out of power as SEC chair, and either a pro or an agnostic crypto person is ending up running the SEC, what does that mean? I don't think anybody knows. Is it going to be great for crypto prices? Is it going to be great for crypto innovation? It remains to be seen.
Yeah.
So,
the bottom line is there could be more favorable. SEC chair could be more favorable, and it could be an administration that is more favorable that allows it to operate more freely in the U.S. So to be seen, to be seen what happens. But let's give our opinion. I still view this as speculation rather than an investment. I personally do not own any crypto, and I'm okay with that. People have asked me, do you care if you miss out? No, I really don't. I think that people get tied up in the get rich quick. You read about it, I'm going to make a lot of money on crypto quickly. My opinion is that doesn't exist anywhere. There is no get rich quick. Even something that looks like a get rich quick, it's like the tip of the iceberg. There's something underneath the iceberg that had happened to do all that. There's a lot of hard work and stuff that people don't see. So I don't view it as an investment. However, we have some clients that want to invest in it, participate in it. We're okay with that. We would say, number one, make sure that all of your other financial goals are on track. We don't want kids' college to depend on the price of crypto because we just talked about how volatile that could be. It's not a good thing. Keep it under generally 1% of your portfolio. And I would say be okay with, I don't want to say lose all of it because it's not going to blow up. But be okay with losing 80% of what you put in. Like if that, like you have to put an amount of money in that if you lost 80%, your financial plan is not in jeopardy. Like we said, the exchanges are questionable, so do it on a reputable exchange. The risk of regulation could come in at any point. Again, looks like the next 4 years, potentially not. But and I would say there's a use case for all of this. There's a use case for cryptocurrency. There's a use case for blockchain. Use it for the desired use case rather than investing in it as an investment. If you want to transact money through cryptocurrency for some reason that's useful to you, do it. Not necessarily for a way to get a high investment return. And the one thing I do want to spend a little bit of time on is, I think this was earlier this year, end of 2023, these crypto ETFs popped up. Mm-hmm. So FIN-LYT, BlackRock, and essentially what they are is, we're going to use BlackRock, for example, just because I've actually studied this one. Long and short of it is BlackRock essentially bought a bunch of Bitcoin. And like I mentioned, that passcode that you have to have, they stored those passcodes in vaults around the country, secure vaults. So it's a way to invest in this ETF where you're buying a piece of Bitcoin, but it is much more secure and safe because BlackRock has over $10 trillion of assets. They're obviously safe, secure. They're much less of a risk of losing that passcode. Plus, BlackRock also has cybersecurity regulations, things in place that you and I, as the average person, can't put in play because we don't have $10 trillion of assets under management. But that would be our general recommendation: is the ETF could be a safer way to participate. Keep it under something you're okay with losing, under 1% generally. Devin, anything to add here?
No, I completely agree. I could argue that it doesn't have really many, if any, practical applications right now in the U.S. In the U.S., right, and in other countries, it certainly does. But no, completely agree with the thought process. If you have all of your financial goals in place and you have maybe a little side pocket of money that you want to speculate on, effectively look at it like a gamble. Yeah, that's fine too. Let me end with a quote from Ray Dalio. He said, Bitcoin looks like a long duration option on a highly unknown future. Yeah. And I think that kind of sums it up. So act accordingly. Yeah.
And I should have said this at the beginning preface, we are not, there's people that spend all day, every day analyzing crypto markets. We are by no means a crypto expert.
By no means.
I know enough to be dangerous and enough to help people make smart financial decisions, I hope. But if you have any specific crypto questions, feel free to reach out. Our advice just be don't throw all your money into the optimism and really rely on it. But any questions, feel free to reach out.
Thanks for tuning in to our podcast. Hopefully you found this helpful. Really hope this is as beneficial and impactful to as many people across the nation as possible. So hit the follow button. Make sure to rate the podcast, and please share with any friends or family members that would also find this beneficial. Thank you very much.